Brandon Johnson in studio with us. Brandon, it's good to see you again, sir.
Good morning, Bob.
Hey, lots and lots of things to talk about, particularly when it comes to everything that's going on all over the country.
Yeah.
I don't care if it's a hurricane, a big fire, floods.
Right.
Does that have an effect on our insurance rates here in the great state of Minnesota?
You know, indirectly it does. And what we're seeing here, especially in the last 3 to 6 months, is there's a lot of changes just in the macro insurance environment as a whole.
Sure.
So, for instance, I was made aware that nationwide, in the last 2 years, Minnesota is number 3 as far as states on the number of claims, homeowners claims in the entire country, only behind Florida and California.
Got to be because of the recent storms that we had, the wind, the hail, right?
Storms, yes.
Right.
And that's been all over the state. So what that does is that puts the appetite for risk for the insurance industry at an all-time low.
Yeah.
Correct? And so I was talking with someone, a major carrier, nationwide carrier, said last year in 2024, for every dollar premium that they brought in, they paid out $1.90 in claims.
Okay.
And that's just not sustainable, right?
Well, except for the fact that, and I'm going to be the devil's advocate here, right? Because I pay my insurance every single month.
Correct.
And I haven't had a claim ever, right?
Yep.
I've been a homeowner since Lassie was a pup. So that's a lot of money that I have paid to my insurance company. And I know they're investing it wisely.
Yeah, at the end of the day, their insurance, and they have actuaries, and insurance is a bet at the end of the day,
sure.
right? And so when it's a losing proposition, there's nothing that can happen other than rates to increase. Even though there's some that, like yourself, aren't making claims.
Right.
As a whole, if they're losing money, they're going to make changes, and that's what we're starting to see. How that affects the real estate industry as a whole, there's a lot of implications, but by and large, you're seeing carriers go to more endorsement-based policies. And so what I mean by that is it used to be more, and I'm oversimplifying this to make a point, right? Option A, B, or C, and they were all full replacement costs, like on a roof.
Right.
More cut and dry, full replacement costs. You didn't have to worry if something happened, you were covered. Now you're getting more of an a la carte menu on. Do you want this coverage? Do you want that coverage? Roof coverage are now not necessarily based on replacement costs, but or condition.
Sure.
And I'm by no means an insurance expert, but
Right.
It used to be like, what is the condition of the roof and that sort of thing. Now it's
whatever.
age, and so the long and short of it is we are being underwritten, much more scrutiny, higher level of scrutinization on policies than ever before.
For example, if I bought a brand spanking new home, my insurance rates for my roof would be less because it's a brand new roof.
Yeah, and not only that is there's going to be a history on, like, if you're going to purchase an existing home, they're going to underwrite, look at the history of the claims on that particular home. So if that home has had a number of claims in the last 2 to 3 years, that could, nothing to do with you, could impact your ability to get insurance at a reasonable rate, and there may be implications on that.
And, you know, I'm going to backtrack just a tad, and I want everybody to understand that I realize insurance is a business.
Yep.
And just like any business, there's profit and there's loss, and the only reason you're in business is to be profitable so that you can stay in business.
Yeah, and unfortunately, it affects, there's unforeseen circumstances or unforeseen unintended consequences that go with every decision. But how it's impacting our buyers is, it used to be as part of the lending process, you go to get a home loan, and the last thing you do on your way, you know, the week before closing would go get your insurance policy, go get your homeowner's binder. That we're recommending be one of the first things you do now, just because your rate is not going to be as set in stone. Loan officers used to be able to estimate a homeowner's insurance policy very easily just based on the purchase price, and that has gotten tenfold more complicated. And so we're seeing some people being directed to the Minnesota Fair Plan, meaning you're going to pay a higher rate, and it may have nothing to do with them or the policies they've had in the past. It may have everything to do with the property, or it may have to do with that they've incurred a number of claims. Again, the scrutiny that you're being underwritten on is far greater. It was almost non-existent. I shouldn't say non-existent, but it's night and day to what it was now.
So let me ask you this question. When you sit down with home buyers, right?
Yep.
Are they sometimes really surprised at all of this because maybe they haven't thought that far down the road?
Yeah, because it's a dramatic shift in the market conditions right now.
Sure.
And this is really in the last 6 to 7 months new phenomenon. And so anytime you get a dramatic shift, whether even if you're a first-time home buyer or you and I that have owned homes for decades, right? It's not how we were accustomed to doing it. So if you haven't bought or sold a home in the last 7-8 years, it's going to be foreign to us as well, that the market shift. I'll also add, even existing policies, they're getting changes too. My policies, they're more restrictive on what they're covering. They're just tightening their belt significantly. So the biggest thing you can do is understand what your insurance policy covers, what it doesn't cover. It is less and less more of a one-size-fits-all, and it's harder to compare and contrast. You really have to sit down with your agent and understand what's being covered, what's not being covered. But that's a shift in the market that is affecting home purchases, home buyers to various degrees, and it's all about needing a higher level of wherewithal and understanding on what you're getting into.
I look at these folks out in California, right? And literally years ago, some insurance companies stopped carrying them. That was just that. And that was years ago because of all the fires and all the floods and all that kind of stuff. You really can't blame a company for doing that because it's a business decision.
Yeah, I mean, you're getting companies that have pulled out of Florida because of the last
hurricanes. Whatever.
You're getting companies that have pulled out of California. They're making business decisions. And so, that indirectly affects, if you have a national carrier, even if you have someone, a local broker, they're still brokering it out to a national investor. And there's different layers of insurance investors, even beyond my comprehension. They're all national to some degree. But you really are affected indirectly by some of these decisions. And just like the mortgage industry, when we had the foreclosure boom, that independently affected our values too. Even though we were paying, those of us that it didn't affect, you still indirectly, macro conditions will always indirectly affect everybody. Even if you say you haven't made a claim or anything like that, that's always a factor, good or bad. And there's positive, outcomes too in macro environments. But whenever there's a macro shift, it affects everybody.
Brandon, what is the best way to work with you guys?
You can visit us online at VoigtJohnson.com or 320-774-2400.
Brandon Johnson, thank you, sir.
Thanks again, Bob.